It's 8 p.m. and it's time for Money9's Daily Market Dose Corporate Central, where we bring to you the everyday action from the corporate world, big corporate headlines, and analyzing all the fluctuations of the market. We get you all of these highlights on this show. Let's find out what took place in the corporate world today. The Reserve Bank of India has given SBI Funds Management, a joint venture between State Bank of India and France's Amundi, permission to purchase up to 9.99% stake in HDFC Bank and has recommended the company to do so within 6 months. The permission has been given in tandem to the application submitted by SBI FML to RBI, according to the HDFC Bank, which added that the approval is subject to a few conditions. The RBI asked SBI FML to purchase the aforementioned substantial stake in the bank within 6 months or by November 15, 2023, the bank has stated. Additionally, according to the RBI, SBI FML must make sure that its total stake in HDFC Bank never exceeds 10% of the bank's paid-up share capital or voting rights. The investment division of Goldman Sachs Group drastically decreased its exposure to the Adani Group in its ESG portfolios in the weeks following allegations of fraud made against the company by short seller Hindenburg Research. According to data collated by Bloomberg, Goldman funds designated by the European Union as pursuing environmental, social and governance goals sold 11.7 million shares in Adani firms in February. According to statistics, Goldman Sachs Asset Management actively managed ESG fund exposure to Adani was only a stake in Ambuja Cements totaling about 4 lakh shares after the retreat. In more news, Adani Ports and Special Economic Zone has set a new benchmark by handling the highest ever rail cargo of 120.51 million tons in the financial year 2022-23, surpassing the previous best of 98.61 million tons. Under the General Purpose Wagon Investment Scheme of Indian Railways, cargo handled by rail has grown by 62%, Adani Ports had it. And moving on to the aviation sector, Go First will resume its flights from May 27th onwards. For the cancelled flights, full refund will be issued to the original mode of payment, the airline has said. Further, as per reports, low-cost carrier Indigo has asked American engine manufacturer Pratt & Whitney to quickly provide engines for the airline to press its grounded planes back into service. The airline wants to increase its domestic frequency to fill the supply-side void created after Go First's exit, they added. Meanwhile, Air Castle, an Ireland-based lessor to SpiceJet, has informed a tribunal that settlement talks regarding unpaid dues were inconclusive. Air Castle had previously sought to initiate bankruptcy proceedings against the airline for non-payment of lease rentals and other dues. SpiceJet owes 50 crore rupees to the lessor and has been granted time till May 25th to reply to the plea. The Supreme Court on Wednesday gave SpiceJet time till July 18 to pay the settlement amount to Credit Suisse in $24 million dispute. Credit Suisse told the court that while SpiceJet had made some payments, an outstanding amount of around $4.4 million is yet to be paid. Vedant Fashions, which owns the ethnic wear brand Manyavar, has announced that the sale of up to 9.88% stake through offer for sale. On Wednesday, it said that one of its promoters planned to sell up to 7% stake in the company for at least 1,962 crore rupees. Ravi Modi Family Trust, a promoter of VFL, proposes to sell up to 1.69 crore equity shares, which is 7% of the total issued and paid up equity share capital of the company, according to a regulatory filing. The floor price of the offer is 1,161 rupees per equity share. The offer is being undertaken by the sellers for achieving the minimum public shareholding of the company, it has said. Currently, the promoter's holding in the company is 84.88%. And according to an ET report, the government will likely list the state-owned Shipping Corporation of India land and assets within a month, paving the way for privatization of the country's largest shipping firm soon after that. The government intends to invite financial bids for its entire 63.75% stake in Shipping Corporation of India soon after the demerged entity of SCI Land Assets is listed. The demerger of SCI Land Assets was approved by the Ministry of Corporate Affairs in February this year, and the process was completed in March. In 2019, the government had announced its intent to privatize SCI, but the plan was delayed over issues such as the transfer of the funds to the demerged entity. Vedanta stock remained in focus on Thursday due to two reasons. The first is that Vedanta's parent company, Vedanta Resources, is in talks with Deutsche Bank as well as several global banks including JP Morgan and Barclays to raise a $50 to $600 million loan. The company's $500 million bonds with 7.125% interest are maturing on May 31st. Even though VRL was in talks with Farallon Capital Management to raise $1 billion, but due to the delay in closing the deal and high interest rates, VRL has reduced the amount and is in talks with several other banks. This loan will be raised through the company's Zinc International unit. In another news, Vedanta's board will meet on May 22nd to consider the declaration of the first interim dividend for FY24. After a strong opening, Vedanta shares closed with a slight decline on May 18th. And LIC's round of bad news continues after the continuous fall in the stock post-listing. Now the financial performance of the company is becoming a matter of concern for the investors. Since listing in May 2022, the stock has fallen by 40% from the issue price of 949 rupees. And now LIC's income from selling new policies has seen a decline. In April 2023, where the NBP of the entire life insurance industry saw a decline of 30% on an annual basis, the NBP of LIC alone declined by 50.41% year-on-year to 5,810.1 crore rupees. The main reason for this is the decline is believed to be a sharp decline in group single premium. LIC's personal single premium fell 23.1% to 1,014.5 crore rupees in April, while group single premium fell 65.8% to 2,899.6 crore rupees. In this year's budget, the government had abolished the tax exemption under Section 80C on non-ULIP insurance premium above 5 lakh rupees, and the effect of which is visible on the insurance sector. Auto parts maker Pricol has expressed its objection to the Competition Commission of India on Minda Corp's plan to buy 24.5% stake in the company. In the 7th episode of Corporate Central, we had told you that Minda had sought approval from the CCI to buy an additional 24.5% stake in Pricol, its biggest rival in the two-wheeler instrument cluster business. The promoters, who hold 36.53% stake in Pricol, had objected to the purchase, saying that they do not have plans to sell. Minda Corp had said in February that this deal is only a financial investment, and the market also believed that Minda Corp would buy up to 26% stake in Pricol. Well, that was all about corporates. Next up, let's take a look at some trending market stocks and also analyze the reason behind it. First up, JK Tyre shares fell by more than 6% on Thursday, May 18th. The stock touched an intraday low of 186.15 rupees. In fact, the company's business has got support in this quarter due to the decrease in the cost of raw materials and increase in demand. JK Tyre's profit in March quarter has increased by 2.7 times from 40 crore rupees to 108.4 crore rupees. The company's sales increased 9.7% from 3,311.8 crore rupees to 3,632.5 crore rupees during the period. Working profit increased 65.1% from 227.9 crore rupees to 376.2 crore rupees. Margins have increased from 6.9% to 10.4%. And talking about FY23, the company's sales increased by 22% to 14,681 crore rupees, which is a record level so far. But the market was already expecting good results, as we had also seen in the results of Apollo Tyres as well. Maybe that's why the stock has delivered a return of about 22% in the last 1 month before the release of the results. And after the good results, investors thought that it's better to book some profit from the stock. However, from a long-term perspective, brokers are expecting the demand and market share of this company to continue to grow and are bullish on the overall tyre sector. Shares of Devyani International, the largest franchisee operator of KFC and Pizza Hut in India, saw a 5% jump on Thursday despite the company's profit falling more than 20% in the fourth quarter. In quarter 4, the company's profit has decreased by 20.4% from 76 crore rupees to 60.7 crore rupees. However, during this period, the income of this QSR chain company has increased by 27.8% from 590.7 crore rupees to 755 crore rupees. Working profit has increased by 10.7% from 139.6 crore rupees to 154.6 crore rupees, but margin has fallen by almost 3%. Working margin has decreased from 23.6% to 20.4%, but despite this, brokers remain confident on the stock. CLSA has outperformed from buy rating after the recent rally and raised the target from 180 rupees to 205 rupees. Citi maintains buy and raised the target to 239 rupees from 237 rupees. Also, Jefferies maintains buy to hold rating but fixed the target at 195 rupees, which is above Wednesday closing of 174.30 rupees. Restaurants Brands Asia, that is RBA, which was earlier known as Burger King India, saw its shares jump up to 20% on Thursday, despite the fact that in the fourth quarter, the company had a loss of 73.4 crore rupees, and this loss has increased year on year. The company had a loss of 67.1 crore rupees in the same period last year, but despite the increase in losses, the reason behind the enthusiasm in the stock is the good performance of the company at the operational level. RBA sales in March quarter increased 28.5% from 400 crore rupees to 514 crore rupees. Working profit was up 34% from 20 crores to 27 crore rupees. Operating margins have also improved. Margin 5.1% improved to 5.3% despite the company facing headwinds like increase in prices of milk and cheese. However, some relief has been seen during the quarter due to fall in prices of vegetables from higher levels. And the second reason is that the company's other expenses have increased from 164.6 crore rupees to 207.2 crore rupees as the company is expanding rapidly in India as well as Indonesia, which has resulted in the increase in the employee expenses and interest cost. Honeywell Automation stock has seen a jump of more than 10% on the basis of fourth quarter results. The stock touched a high of 41,258.80 rupees during the day. That is, the stock crossed the intraday mark of 41,000 rupees. The company's profit in quarter 4 has increased by 54.2% from 72.7 crore rupees to 112 crore rupees. The company's sales during this period have increased by 27.2% from 668 crore rupees to 849.7 crore rupees. And if you see for the whole year as well, the company's profit in FY23 has increased by 29.2% from 339.1 crore rupees to 438 crore rupees, while the income has increased by 16.9% from 2,948.3 crore rupees to 3,447.6 crore rupees. Post results, Nomura has maintained buy rating on the stock with a target price of 50,642 rupees. And that's all tonight on Corporate Central, signing off with some important corporate events and triggers that have the potential to make big market impacts. Let's take a look. Up first, globally. On May 18th, impact of US unemployment claims and existing home sales data to be felt in the market. And also on May 19th, results of JSW Steel, NTPC, Power Grid, Crompton Greaves, Abbott India, Glenmark Pharma, Alchem Labs, Bandhan Bank and Hind Copper to be released. Also watch out as Vedant Fashions will open offer for sale for retail investors on May 19th. And IPO listing of Nexus Select Trust REIT is on May 19th. And RBI board meeting will take place on May 19th as well, where it will consider giving a dividend to the government. On the global front, on May 19, G7 summit will start in Japan and will go on till May 21st. Also, Japan's April CPI inflation data will be released on May 19th. With that, it's a showdown on today's Corporate Central episode. See you again tomorrow with more from the corporate world. Until then, stay tuned to Money9.